Friends, you are welcome to my YouTube channel Academy Global Education. Today I shall discuss various terms related to loan. Every individual must know these terms to make best use of financial leverage. Video is going to be very interesting and important one. Don't skip and watch till end. First I shall discuss fixed rate loan. The interest rate is fixed for entire duration of the loan. This enables the borrower to know the exact cost that they would pay over the entire period of the loan. Fixed rate loans are useful when the interest rates are low and borrower wants to lock into this low rate. Next, I shall discuss variable or floating rate loan. The interest rate on this loan changes or gets reset periodically with the changes in the benchmark rate. It can be linked to an external benchmark like repo rate or internal bank benchmark like marginal cost of lending rate. In short, it is called MCLR. It is preferred by borrowers for long-term loan, especially when they feel that rate is likely to fall over a period of time. Next, I shall discuss home equity loan. It is also called loan against property. In short, it is called LAP. Here, borrowers uses the home or any other real estate as collateral for the purpose of taking a loan. Hence, borrowing is done against the security of this asset. These borrowings enable them to raise money which can be used for several purposes. Next, I shall discuss hire purchase. It is an agreement where an individual agrees to buy a certain asset but paying installment over a period a time. There is an initial payment that is made followed by several installments over a given time period. The persons paying the amount become the owner of the asset when the final installment is paid. This separates the hire purchase transaction from a lease. Next, I shall discuss amortization. Amortization of loan is the process where the capital borrowed is repaid over a period of time. This is done through fixed payment, which is also known as equated monthly installment. In short, it is called EMI. The entire repayment amount is converted into EMI. EMI consists of both principal and interest in different proportions. The amortization chart will list out the breakup of the EMI into the interest and principal of each month. In the earlier period, there is a higher element of interest component in the EMI repayments. The same becomes smaller as the principal component increases with time. Next, I shall discuss refinancing. The act of refinancing a loan means that an individual repays an existing loan either to extend the duration of loan or lower the interest cost. When new loan with lower interest rate is available, then it will reduce the overall outgo. It is generally done for long-term loans or for those loans where the amount outstanding is high. For example, refinancing of home loan. Next, I shall discuss repayment. There is a specific schedule that is prepared for every loan where total amount to be paid is broken down into equal installments. When borrower has some extra money he would like to reduce outstanding amount of the loan, he makes repayment, which is paying back the capital before the specified time. The repayment will reduce the capital and it will reduce the remaining EMI period too on the loan. Lots of loans restrict the repayment of the loans for certain periods like 12 months or levy charges for repayment. For example, car loan. RBI has mandated that there would be no repayment charges for home loans taken from banks. Next, I shall discuss Pre-EMI interest. It refers to the monthly payment which includes interest only. Normally, a loan will not have capital amount repaid till the time the entire loan is disbursed. This kind of Pre-EMI interest usually present for house properties that are not completed. Hence, the full amount of loan has not been taken or possession of the house is not received. The normal EMI repaying both principal and interest will start at a later date. Next, I shall discuss moratorium. Moratorium refers to the period wherein the repayments on a loan are stopped temporarily or for a certain period of time because of some extraordinary factors. For example, moratorium given during COVID outbreak. Important thing is that under normal circumstances, non-payment of regular EMI will be considered as default. But under moratorium, pause will not be considered as default. This does not affect the credit history of borrower. The interest meter shall continue, hence it shall increase the dues of the borrower. Next, I shall discuss mortgage. A mortgage is a debt instrument that is backed by a specified property. Borrower has to pay back of a specified time period through regular repayments. In simple words, a home loan backed by the security of the property is also called a mortgage. Individuals use mortgage to buy properties without putting up entire money upfront, as this allows to repay the amount over a period of time. It allows for leverage for buying an asset which they would otherwise not be able to afford. Next, I shall discuss pledge. A pledge is something that is held as a security on a contract. In case of a debt, it is an asset that is held and which can be sold by lender in case the borrower is not able to repay the amount. Under a pledge, the asset, which is usually a movable asset, remains with the lender till the loan is repaid. This can be contrasted with a mortgage, which is for an immovable asset. Next, I shall discuss hypothecation. This is the term used for creating a charge against an asset, but in this case, the asset remains with borrower. In this sense, it differs from a pledge where the asset is with lender. If there is a default, then the lender will have to first take possession of the asset and then sell it. The best example is that of a car loan where the asset is with the user. With this, I complete today's video. Don't forget to subscribe my channel. Please like my video and share as much as possible. Thanks for watching my video.